So insurance companies that provide low-cost healthcare risk being shut down. The Council for Medical Schemes wants to scrap them, saying they provide inferior benefits and the bare minimum for chronic conditions. But the insurance companies say instead of scrapping low-cost benefits, the industry must bring rogue players to book. The new regulations planned for next year will deprive hundreds of thousands of South Africans of private healthcare. Kerry Hertog, who's the spokesperson for stakeholders in the Healthcare Forum, joins us now in studio to help us unpack some of these issues. Kerry, once again, thanks for your time. Welcome to Newsroom Africa.
Thank you very much, Ayanda. Nice to meet you.
Before we get into the implications of all of these things, I think it's worth taking a bit of a step back to make sure we're all kind of in the same room, so to speak. What are these low-cost benefit options, so to speak, and how are they different to any other service provided by the healthcare sector?
It's highly regulated, the industry. So we've got the Medical Schemes Act, which mandates Council of Medical Schemes to look after any product that is deemed to be doing the job of a medical aid. And that's defrayment of costs, providing benefits, paying medical service providers. So if you're doing any of those elements, you're considered to be doing the job of a medical scheme. And to be registered as a medical scheme, there's also a very onerous process, 25% reserves. You have to give a minimum benefit package of 26 conditions, which is all expensive. And low-cost benefit options or low-cost medical insurance, even though they do the job of a medical scheme, don't necessarily comply with being registered as a medical scheme.
Okay.
And based on that and demarcation exemption framework that was published in 2017, came into effect then, ensured that the medical insurance product should have been shut down, but it was recognized by Treasury and the various players that there are hundreds of thousands of people on this cover. And they had to put it into a demarcation exemption framework, which is governed by Council of Medical Schemes. So we applied to them, gave them all the details, they gave us an exemption and allow us to continue to operate. That was 2017, April 2017 it came into effect. And under that exemption framework, there was always a LCBO framework that they touted as this is where we're going to move you into. 2 years later, nothing had been done, and there was a rollover. So we're into the second year, going into the second part of the rollover. And then all of a sudden it was pulled out from underneath us. Basically, you can't continue what you're doing. The exemptions that we gave you will be withdrawn. And the low-cost benefit option framework that we've always said we're moving you into was suddenly pulled.
Sure. Okay. Yeah. We'll talk about the implications in just a moment. Am I understanding this correct, that the low-cost benefit option is meant to be, as the name suggests, an affordable option for medical aid? It's
an affordable alternative to medical aid.
Right.
And it's affordable because we are insurers and we can underwrite, so we can exclude certain conditions, we can limit benefits, whereas in a medical scheme environment, you have to cover everything, basically. And you'll find a number, when people don't get what's covered, there'll be a headline about what wasn't covered. I think recently there's been the latest one about one of the larger players in the medical scheme environment that didn't cover something because it wasn't covered under X, Y, or Z rule.
Yeah.
We don't necessarily have those issues. Our premiums are very affordable because we cover the basics. We cover being able to go to a GP, being able to get your chronic meds, radiology, pathology, hospitalization. So your top-end cases that the medical schemes have to insure against, because ultimately there is always insurance in play, we exclude.
Right, and government's contention is that this has opened a window into inferior benefits, I think is how it's being quoted in some instances. I mean, what's your response to that? I get the impression, at least at face value, that this is to try and protect customers who perhaps get into this and don't necessarily receive the type of service they need. What's your response to that?
I think you also need to look at who the customers are. Very often, they're 100% subsidized by their company, and the employer's paying it. And they've got access to unlimited GP consults, which you as somebody on a medical aid, as soon as your savings is depleted, would start paying out of pocket. So I'm not really sure they understand who their customers are. The data that was presented to us at a forum recently at Council of Medical Schemes was not great. We would like to see the data set that they were given. We believe that it was about 7,000 members the data was provided of, and the conclusions they reached were not correct. They don't understand the industry. They don't understand insurance and how insurance is structured. They understand medical schemes because that's what they do. And we would rather have engaged with the players at council, explained the data and why it's showing what it's showing, maybe found additional data to strengthen what they were looking at, instead of the circular coming out on the 4th of December before we all go on holiday, and then only a couple of days later providing us with the data that they had looked at.
Right.
And that was incomplete.
Which is going to bring me to my next question about how much consultation actually happened with you before you found out about this move, if any.
None. Say 2016, the original demarcation came out. It came into regulation in April 2017. There were one or two things they asked for us to declare how many members we've got, benefits we're paying, etc. And yes, there's one or two discussions around low-cost benefit options, but they've also got a new basket of primary health care that they're looking at. There are a number of other items on their agenda that they have as council, and they should rightly have, but there was very, very, very little engagement. And if they did have engagement, it would have been with independent parties, and that information wasn't shared. It was never as a group of insurers.
I imagine this option exists in other countries as well, the option to have low-cost medical aid benefits, so to speak. Are there any lessons to take from how those other countries have administered this option, even if it is to address what might be very legitimate concerns that the government has?
Australia, they actually encourage their countrymen to take out private healthcare, and it relieves the burden on state. They've got a massive crisis at the moment where young people are leaving their private healthcare insurance and relying purely on state because the private healthcare benefits are getting more expensive. So Australia as a government would apply pressure on the insurers to reduce premiums to keep the young and the healthy out of relying on state and in private insurance. What's being proposed is, instead of fixing what we've got, they're saying we are aligning with the NHI policy,
right,
which is going to be a one-tier where you can only receive your treatment from state, and what state doesn't cover, you can then go and insure elsewhere under a medical aid. Because medical insurance in this space, they're saying, doesn't exist. Medical insurance is not an option. So they're replacing nothing. There is no replacement on the table, and that's the frustration. Which would mean that a lot of people who used to rely on this service will now have to turn to the state if they can't afford the full-on medical aid scheme. Okay, you mentioned the ideas of fixing what we have, and there's talk about rogue players in the sector. Tell us a bit more about that. What are some of those issues, and who do you suggest? Your rogue is my maverick. What do you want to say? Look, we've done it for 15 or so years prior to demarcation exemption framework, and we just figured out a way how to do it, how to provide the service to members. Occupational health, where you've got an agreement with an employer, because it is on him to ensure that his employees are looked after. So I don't really believe they're rogue players. I'm saying, yes, there might be people that a 24-month waiting period. It's unreasonable. We don't recognize a medical schemes membership, so somebody who can no longer afford medical aid, moving into the medical insurance environment, is suddenly having waiting periods reapplied. Let's recognize each other's benefits, the risks involved, but all of that would have been unpacked at Council of Medical Schemes. And if it had been unpacked, we wouldn't have had Circular 80, and we wouldn't have had our planned march, which is tomorrow. Yes, which is where I'm going very quickly. Tell us a bit more about that. Obviously, that's an action plan before we see the rolling out of this law, if it does get rolled out. So we've sort of gained momentum very quickly. So last week, Thursday, formed a bit of a WhatsApp group, and we had a number of interested parties. And 9 o'clock tomorrow, we've all agreed to arrive at Council of Medical Schemes and hand over a memorandum requesting that they either rescind or amend Circular 80, because that's the bone of contention at the moment. We need to have that engagement before they can issue something of that nature.
Absolutely. You'd imagine stuff like that would happen before, but alas. Thanks very much for your time. Do appreciate you getting us into the picture. We'll certainly keep a close eye on the story as it continues developing legs. Kerry Hertog is a spokesperson for stakeholders from the Health Care Forum. Once again, thanks for your time.